Hi, my name is Samuel James Price, and every single day I do a show called the Crypto Liver Show. Every single day, we go over the news at around 11:30 a.m. Eastern Daylight Savings Time. And today, we're here again giving you the news in 3 to 5 minutes. We're going to show you what's merging, what's happening, if there's something going to happen to a mainnet. Is a coin coming out with a mainnet that's going to basically move interoperability, maybe make people go into DeFi? Is there a big funding round that just got closed for a new coin? What's happening? What are the VCs doing? Where is money flowing? Important information every single day. With that, let's jump on in without further ado. AI crypto trading bots are the new edge for now. Artificial intelligence may kill traditional trading, but your advantage may not last long, since Jeff Wilsner. There's a word that every trader knows, edge. You need an edge to trade successfully. An edge can come in many forms. Maybe you understand something the market doesn't. Maybe your analysis is sharper than the conventional wisdom. Or maybe you're so good at reading the price charts and recognizing the patterns that you can sniff out the precise moments to buy and sell. That's what I do. I decided I'm not going to be smarter than everybody else, but I can be more consistent. I can look at the charts more than all of them, and I'm going to see more things than they can in a smaller amount of time. I'll be able to execute around them, and I'll be able to make it as a trader, right? Edge is hard to find. Most people don't have it. Studies suggest that more than 80% of day traders lose money. So what will happen to traders' edge when the crypto markets gets flooded by AI? AI is going to be the enemy of the stubborn-minded. Sherez Aham, managing partner at Storm, a blockchain consultancy, told me recently when I asked him for the biggest impacts for AI for crypto. If a trader does not want to use AI and wants to do everything manually, they're going to get left behind. This is not a trivial concern, whether we like it or not. By far away, the most widespread use of cryptocurrency still is simply buying and selling of cryptocurrency, often in the form of short-term scalping. The AI trading revolution might have already begun, as CoinDesk's Ian Allison recently reported investment data analytics from Chain of Demand, which works for the blue-chip institutions like Bloomberg, has built a tool that leverages ChatGPT to analyze Bitcoin price fluctuations. OKX, a crypto exchange, recently published a guide to the 9 best crypto trading bots to use in 2023, which includes dollar-cost averaging bots, option bots, and hodl bots. And crypto Twitter oozes with sketchy-looking ads for AI trading bots, such as the crypto AI trading bot makes $100 a day. The appeal of AI trading to many is that you can put it to work and then go about your life. A lot of us have a problem with knowing when to sell, says Daisy, a crypto education influencer who goes by the alias Crypto Empress. Daisy now works with 2 AI trading projects, Autobot, get it, and the DeFi Trading Club, that do things like hunt for entries and exit points, assist in technical analysis, and help with macro studies like evaluating a crypto startup's tokenomic structure. This is going to change how people take profits, said Daisy. Now people don't have to be stuck at computers. AI bots are going to do it for you. All you have to do is cash out your money and do real-life things. Other AI trading projects such as Varox are using the tech to evaluate social media activity to gauge market sentiment. That's also pretty interesting. We've been using stuff like this where DeFi meets artificial intelligence. There's a lot of ideas, but they're also not perfectly implemented yet. You know what I mean? Like, it sounds great, and even when you set up a bot can still get rocked. I want to make this really clear. People think just because they got a bot, it's going to run and everything's going to go perfectly smooth. But that's also not the case, because you're going to have to, it's basically, people have been quantitative trading for a long time, and setting up an AI trade. I mean, people have been trading AI basically, or bot trading for a long, long time. It wouldn't change that drastically, in my humble opinion. But then again, even if AI bots today are not a silver bullet, it's easy to imagine a world where they will be impossible to beat. I happen to have some firsthand experience here. So from the past 2 years, I tried my hand at day trading U.S. stocks, not crypto. That is that you develop a set of rules, a playbook, and then you rigorously follow those rules so you avoid trading the emotion. Many day traders embrace that philosophy. Our edge comes from being robotic, says trader Adrian Zanoncook, founder of the trading group The Burb Nest. Our edge comes from following the reliable steps that have predictable value. So that's what I did. I tried to stick to my trading plan, only pulling the trigger on trades that met the exact criteria, A, B, C, or D example. The price of the stock jumps at the open, then regresses back towards the VWAP. Yep. And the direction of that movement is aligned with the daily trend. That's decent volume on the 1-minute candles, and on and on and on. My takeaway, it's hard. It's very hard. I tried to be robotic in my adherence to the rules, but the problem is that I never had rock-solid confidence that my baseline rule. I mean, you did it for a year, man. See, even in this, the guy didn't do it long enough. Like, to become a good trader, you got to spend 10 years. People want it. Everyone wants them because that many good traders have spent that much time, and you're battling them. You know what I mean? Like, it's not over. This is not an overnight success thing. Trading takes a long time to master, because the people that have mastered it have put in a long time. So think about it. When you clear the air, you're trading against other people, okay? You're trading against other people. If there's more people that know more than you and put more time in than you, it's going to be difficult for you, period, right? So unless you want to go all in, it's going to be difficult. And that's why I teach in my trading group to go all in, to go hard, to make it happen. You know what I mean? EU leaked metaverse strategy proposes regulatory sandbox, new global governance. Virtual worlds will need international engagement to stay open and secure, a leaked European Commission strategy paper said. The metaverse requires a new kind of global governance to stay open and lawful. Dude, one world government through the metaverse. Look what they're doing. Oh my God, this is creepy. The draft documents seen by CoinDesk also proposes relaxing regulations to aid innovation and says it wants to look at the legal barriers to new forms of digital cooperation like decentralized autonomous organizations. Virtual worlds bring unprecedented opportunities in many societal areas, said the document, a version of which is due to be published next week, citing benefits for healthcare, education, and culture. This technological shift also involves new forms of global governance. The Commission will support the creation of technical multi-stakeholder governance processes to address essential aspects of virtual worlds and Web 4 that are beyond the remit of existing internet governance institutions. The document said, likely referring to global bodies that underpin today's online world, such as Internet Corporation for Assigned Names, ICANN, and numbers. Wow. The Commission said it wants by the end of this year to explore the potential of new digital cooperation models, such as decentralized autonomous organizations, which underpin many novel financial applications, and will carry out a study to identify legal, administrative, and economic barriers that prevent their uptake. Kind of creepy in a way, but, you know. BlackRock CEO says Bitcoin could revolutionize finance. The asset manager giant in mid-June filed paperwork with the SEC for a spot Bitcoin ETF. BlackRock CEO Larry Fink says crypto, specifically Bitcoin, could revolutionize the financial system in an interview with Fox Business on Wednesday. We do believe that if we can create more tokenization of assets and securities, that's what Bitcoin is. It could revolutionize finance, he said. Previously known to be a skeptic of crypto, Fink years ago suggested fans of the asset class heavily use it for illicit activities. Fink continued, instead of investing in gold as a hedge against inflation, a hedge against the onerous problems of any one country or the devaluation of your currency, whatever country you're in, let's be clear, Bitcoin is an international asset. It's not based on any one currency, so it can't represent an asset that people can play as an alternative. The iShares unit of BlackRock filed paperwork with the U.S. Securities Exchange Commission on June 16th for a spot Bitcoin ETF. While BlackRock has almost perfect track record for getting ETFs approved by the SEC, Fink couldn't say when a decision for its Bitcoin ETF could be expected. We hope, like in the past, we could be working with our regulators in getting the filing approved one day. I have no idea what that one day will be, but we'll see how that all plays out. Interesting. How do you say no to Larry Fink? It just doesn't make sense. So that's AI, Larry Fink, the EU regulation over metaverse governance, and let's talk about the U.S. jobs report. Private sector companies added 497,000 jobs in June, more than double expectations. It's a pretty big deal. The U.S. labor market showed no signs of letting up in June as companies created far more jobs than expected. Payroll processing firm ADP reported. I remember ADP getting my check from there. Private sector jobs surged by 497,000 for the month, well ahead of the downwardly revised 267 gain in May and much better than the 220 Dow Jones consensus estimate. The increase resulted in the biggest monthly rise since July of 2022. From a sector standpoint, leisure and hospitality led with 232,000 new hires. Annual pay rose from 6.4% rate, representing a continued slowing that nonetheless still is indicative of brewing inflationary pressures. So they want less jobs for less demand so that they can basically lower inflation. More people want to buy things, more money in the economy kind of gives a problem for the Fed. You know, it's weird because think about it. When the Fed lowers interest rates, less people can get a loan, and with less people can get a loan, less people get hired, and there's less. So if the Fed does what they're supposed to do and they raise the interest rates, they actually crush the employment rate. They make people have less jobs. So the Fed's been doing everything they can. They just raised the rates, and the jobs are still going up. This kind of is counterintuitive to what we're seeing, and what it means is Bitcoin's going to win at the end of the day, right? And you can obviously see that Bitcoin just will continue to win. I like it because it means there's more people with more money and Bitcoin's more popular, which helps Bitcoin go even higher.